Aloha, big wave trading family. Despite the extremely overbought situation in the stock market, it was a pretty decent session. On Wednesday, the NASDAQ and NASDAQ 100 hit new highs, extending themselves further from the 50 and 200-day moving average. Since they are so overbought and we've been overbought for so long, I'm in the camp that believes that every dip is going to be bought at some point. I don't know if it's going to be at the 50-day moving average, 200-day moving average, or somewhere in between, the 100-day moving average. But it looks like that with this level of strength for so long, dips will be bought. But for now, we're extremely overbought. The best thing that I saw today is that the Russell 2000 looked like that it was ready to continue its breakdown after switching to a neutral signal. If it would have closed below the 50-day moving average on above average volume like it was looking, it's quite possible, but I don't know until after the close and looking at stocks in the index that it might have switched to a sell signal. It's a pretty early switch, but with the recent churning and poor price action, the higher closes, especially after a gap up, and then the close near the lows, especially after we followed through yesterday and was able to close below those intraday tails that we saw in these three sessions. I thought that it was going to be a bad session, but we reversed higher. That being said, breadth is still flat overall in the New York Stock Exchange. It's rolled over and continues to move lower on the NASDAQ, while the NASDAQ and NASDAQ 100 go to hit new highs. That is a completely negative divergence and tells us that only a few stocks are really lifting the boat. But we'll see how this turns out. Investors Intelligence Survey shows bulls up to nearly 65% and bears under 15%. Those bulls are at 5-year highs. So the crowd's bullish, the market's overbought. I'm having more sell signals trigger than at any time that we've been overbought in the past few sessions. But that being said, I'm still getting new long signals. And that's a testament to this market that despite the overbought condition, I'm still finding stocks that are actionable that have the proper reward risk setup. Are any of them perfect? No. If I was forced to go long perfect stocks only, we wouldn't have any new long signals. But by taking measured small positions and by trading quote, quote, scared, that keeps me from being too scared to trade at these overbought conditions. I know when to push it. I know after a market pullback, starting to look for a follow-through day when you bounce, you look for the stocks that are holding up and that look like TNET, which is a new long position today, but you look for stocks that look like this. After, though, a big downtrend, you get a stock that's holding up like this, or a stock that looks like PZE. You know, after a big bear market, you know that the chances are that these are the kind of stocks that rock. But still, stocks that look like this, they're actionable here, so let's go and get into them. The highest quality long signal today is got to be ZG. ZG was in my Cancelim quality scan following a bullish intraday reversal following earnings. It was also my price volume BOP surge scan with the BOP and volume surge confirming the price move. Nice big hammer candle. I want to get long 3% of my account capital, 2 for Cancelim, 1 for being in that price volume BOP surge scan at 41.57, the high of the day. My first cut loss will be a move below 39.76 right here, so 39.75, and then my final cut loss, the end of this wick, 38.82. So if it hits below 38.83, I will be all out of ZG. But this is a high quality setup with it being on top of its 5, 10, 20, 50, and 200-day moving average and at strong September and October support. So it either explodes higher here or we start cutting our losses. It's right underneath. Once again, it has that 5 to 4 to 1 reward risk ratio setup. I'm looking for a previous measure move, something similar to that March to June move right there. The highest quality long signal, as I've already shown, was TNET. TNET, Cancelim quality. TNET, perfect speculator quality. Very high quality stock. I think if I remember right, it has an EPS rating of 99, putting in the top 1% of all stocks in the Investors Business Daily database. But it's extended from the 20-day moving average, so I have to, and the 10-day moving average. So I'm going to start exploring if I even need to cut it further. But because it's an earnings victory, it's a different situation. Earnings gap up plays when they're really strong, that becomes the new support level low. Like, you can forget, if this stock is really strong, it will never see 39 again. The same similar situation whenever I went long OSUR. It's the one that's on the top of my head, so I'm using it right up here following its earnings win. As you can see, it never came close to touching that low again. Now we're completely out of it, so it's irrelevant. But that's the idea behind TNET. So I want to get long TNET. Instead of 4%, 2% for Can Slim, 2% for Perfect Speculator. It's just 2% total because it's halved for being extended from the 20 and 10-day moving average. Want to get long, limit order, 40.97 with that bullish hammer candle reversal bar following the earnings. First cut loss, 40.29. Final cut loss, 38.99. Pretty clear cut. The next stock I'm going to go over is PICO. PICO, this is a pretty good looking overall chart pattern. In fact, the chart pattern is what I would consider very, very pretty. Why? Do you see any red bop in this chart? That's what I like to see on a Zoom 4, and look at a Zoom 3. Do you see any red bop in this chart? When I don't see any red bop in a Zoom 3 and Zoom 4 chart, you can be sure I like it. Now, that being said, bop's going in the wrong direction. Following earnings on Tuesday, it had a big nasty candle price bar, but an immediate reversal right at the 50-day moving average with a bullish hammer reversal candle price bar on above average volume, with bop increasing back to green bop and above the last green bop level. So that's pretty solid confirmation. PICO is only my price volume bop surge scan, so it's 1% of my account capital. Limit order, the high of the day, 18. First cut loss level, move below 1735, 1730, and then my final cut loss level is the last big gap and run day here with the green bop, 1690. So if it goes below 1695, I will be all out of PICO. Then there's two lower price stocks that are still higher quality that are also long signals. PZE is from my Perfect Speculator low price stock scan. You can see on this chart here, huge move off the December lows. It has spent time ebbing and flowing, consolidating the recent gains, allowing the 200-day moving average to play catch up to the price in the 50-day moving average. Very nice move today, stronger volume. It's an early long signal and anticipation of a breakout to new highs in the next, hopefully tomorrow. But with the recent bounce off the lows on above average volume, with the BOP surging, BOP now going green and holding green these past two sessions, with that volume and the price candle today, the engulfing full body candle bar over the past three intraday sessions, with that nice longer term chart pattern, PZE looks like it's coiled and ready to break out. So I want to get long 1% of my account capital since it's a Perfect Speculator stock. If this was just a regular stock from another scan, it still might be 1%, but it wasn't confirmed anywhere else. So that's why PZE is high quality, because if you look at the fundamentals, you see it's a $13 stock. Why is it high quality? Because it's a Perfect Speculator quality stock based on that previous 100% move, and the stock still being within 20% of the old highs. So get long 1343. First cut loss, a move below 1310, 1309. Final cut loss, you can even use right here 1295. It moves below 1295, 1294. Splitting hairs. I'll be using that level. I just always recommend for everyone to use the closest one first. If you're going to use that final one, which is a move below 1210. It moves below 1210, hits 1209. I'll be all out of PZE. And what I didn't mention on all these, the first cut loss level fails on any of these stocks while losing green bop and or doing so on heavier volume. I'll be moving half or to all of my stops up higher. And then the final long signal, the add signal from TBBK. Beautiful Zoom 4 chart. Why is it beautiful? It's not perfect. It's not super beautiful. If it had max green bop from right here in September all the way to today and then had that price bar, we consider it beautiful. Instead, it's really pretty. The Zoom 4, as you can see, has no red bop on it. All tall green tall green volume bars above that yellow line. Something rare to see nowadays, but excellent price action. Nice tight trading, breakout higher, nice tight trading. A nice tight trading as it ebbs and flows higher. And look at all of these pocket pivot point signals. All this above average volume and all this green bop. That's why TBBK, despite being under 10, is a quote higher quality stock. It is actually Can Slim quality, so it's a Can Slim quality stock, and it made my green bop for the past 20-day scan. So technically it's a 3% position. It's halved because it's an add signal. So 1.5% of my account capital in TBBK. 874 limit order, the high of the day. You could use three stops here almost even if you wanted to. 850, move below 851. 834, move below 835, and then maybe even 812 with the move below 813 with this add signal, because the add signal with the initial long signal is going to make it a pretty big position for a sub 10 stock. So I want to split my stops into third between 850, 834 and 812. All right, everyone. I'll see you in the chat room during the pre-market on Thursday. Aloha.